Animal Spirits, Animal Spirits. A friend of mine just contacted me. He said, Mike, I'm hearing everybody talk about Animal Spirits now, and in the context of what's happening with Trump and the stock market going up. The Animal Spirits, unleash the Animal Spirits. Of course, that term, Animal Spirits, was coined by John Maynard Keynes, the great economist, in his book, The General Theory of Employment, Interest, and Money. Animal spirits referred to, I guess, the tendencies, the emotions, the proclivities of people to take risk, invest, make things happen. And it's being used now in the context of post-Trump election. By the way, it was not there leading up to the election, and you all know that. I was talking about how people were irrationally fearful, and I was very, very positive during that time leading up to the election. Freudian slip. For some people, I guess. Uh, so, oh man, I lost my focus. All right, so and now the animal spirits are bubbling up to the surface, but I have to say that I remain skeptical. Not that I don't like Trump, I do. Full disclosure, I voted for the guy, and I hope he comes through on the things that he promised. I just, as you know, I've been talking about some of his team that he has appointed. I see these guys as hardline fiscal hawks, supply siders, goofy guys like Larry Kudlow. Uh, you know, um, and so, yeah, tax cuts, great. But spending cuts combined with tax cuts, I mean, you're spinning your wheels. And by the way, the corporate tax cut, if we want to talk about that for a second, and I may have gone over this in a prior video, I don't remember, but I wrote something about this yesterday in thestreet.com. And corporations last year, and you could go look this up, it comes right off the daily treasury statement. Corporations paid I think it was 338 billion in taxes to the federal government. They earned pre-tax 2.24 trillion. If you divide 338 billion by 2.24 trillion, guess what you come up with? You come up with a tax rate of 15%. So if Trump wants to lower the tax rate from 35 to 15%, essentially all he's doing is he's institutionalizing what's already happening. I mean, that's what they're paying is 15% now. If they take that new rate and they end up paying 5% or 7%, that's something. But I mean, how much of that will be offset by spending cuts? I mean, he's got all these guys in there who want to cut everything. I mean, I heard Larry Kudlow the other day, who's going to be his chief economist, the head of the White House Council of Economic Advisors. He said, yeah, we're going to do the supply side stuff. We're going to do tax cuts and we're going to do spending cuts, and that's going to be growth. I've been on Larry Kudlow's show when I used to do TV, and I talked about government spending, and he's like, that doesn't work. Well, it works great for the military, I can tell you that. As a matter of fact, come next week on January 2nd, the soldiers are going to get a big pay raise. Where did that come from? That's Keynesian stuff, man. He said, that's Keynes stuff. That doesn't work. Doesn't work? All right, let's see if it doesn't work. Works great for the military, works great for defense contractors, it works great for anyone who is in the war business. All right, it's going to work great for those soldiers next week who are going to get more in their paychecks. So anyway, yeah, animal spirits maybe. By the way, Keynes was a great investor. He was not just an economist. In the Great Depression, when he owned lots of stocks, and when the market tanked, he doubled down. He added more. He was very aggressive. He bought in 1931, 32, 33 at the bottom of the market. He ended up making a killing. He died a very wealthy man, and that was from his own trading. He was a very, very good trader. He wasn't just like these economists nowadays who you see on TV. They don't. If they were managing money, forget about it. So there might be animal spirits, but what kind of animals right now? I think dumb animals. I don't know. You look at what some of the data was last week. Personal income down. Industrial production down. Retail sales down. Unemployment claims up to the highest level in 6 months with a 1 week rise that was the highest in 39 months. The trade deficit up, 16% in October, which is going to mean the largest subtraction from fourth quarter GDP. I mean, you got a lot of stuff in there that's not looking so hot. all right? And when you get things like income going down, I mean, you need income to rise to sustain consumption and demand and investment. And when it's going down, I don't know how you can look at that as a good thing. I mean, it simply isn't. And all these things, by the way, all these things I've been telling you about were predicted already by the fiscal flows, which since the beginning of this fiscal year, October 1st, and I really started to become pretty evident, I think, around the late part of October, when we really started to see that slow down. All right, could change. Not saying that it'll stay that way. I mean, Trump might pull through. He might get a huge, boom and increase in government spending and the deficit and everything, and that'll just cause everything. I mean, that would validate what the stock market's saying, but there's no such thing as the stock market has a crystal ball. I mean, where was the stock market's crystal ball when we were 800 down the night of the election? I mean, it was lost. Where was the stock market's crystal ball in 2007 when we were at just before the whole financial crisis hit? So, don't think that the stock market is the be-all, end-all. I mean, that's just people making their bets. And we have seen so many times in so many cases where most people just don't know what the hell they're doing. So that's it. I just want to talk about the animal spirits. Animal spirits. If nothing else, it's a reflection of sentiment right now, which is extremely positive. And you see all these people like the CNBC goofballs and everybody else spouting off this term animal spirits. So it's a snapshot of the way people feel. And just like yesterday with the consumer sentiment. That is, I remember, what sentiment was? I think the record that it hit was in 2000 when the market peaked out. So, I mean, again, that's not an indication. That's more of a contrarian indicator than anything else. All right, folks, see you later. Bye-bye.